Hi, everybody. This is Tim from Trading Strategy Guides. I wonder if you guys could give me a sound and screen check. Can you hear me? Can you see my screen up here? My title screen? Anybody? Anybody? Bueller? Bueller? Hello? Thank you. Thank you, Raghu. I hope I pronounced that right. I apologize in advance if I butcher anyone's names. Hi, Fred, Charles. Very cool. Well, it's Tim. I'm with Trading Strategy Guides, and today I'm going to show you a great technical analysis trick that you've never seen before. Isn't that what we're supposed to say? Isn't that the clickbait phrase? A technical analysis trick that you've never seen before in the form of a MACD trend following strategy. Of course, I'm sure that you've seen it before, or maybe you haven't, but first, I want to tell you that we're going to have a question and answer session when I get done with the instructional portion of the webinar. So go ahead and ask your questions, but I may not get to them after we get done with the instructional portion. So be sure to stick around. And if you're watching the recording of this webinar, on the gear in the right lower, I can't even talk this morning, in the lower right-hand corner of the video and select the speed you want to watch this. You can speed it up or slow it down or whatever makes you happy. And of course, stick around the end of the webinar and you'll get trading maxims. That's my favorite part. Another interesting piece of news. I read in The Guardian this morning that European Union lawmakers have voted to scrap daylight savings time starting in 2021. Apparently, it still has to be voted on by the individual countries, but it looks like it might be a thing. So, in my opinion, it's past time to do the same thing in the US. I guess it applies to the UK as well, as long as they are still. So apparently some members of the UK Parliament accused Brussels of trying to be Time Lords. Yeah, that made me laugh. So anyway, let's get started on this MACD trend following strategy. If you've been in my trading room over the years, you know that I've traded reversal as well as trend following strategies. And you've also heard the maxim from me, cut your losers short and let your winners run. I always, obviously that's what you want to do, but what does that even mean? And letting your winners run is a great idea, but it doesn't really work too well if you're trading counter trend, because there ain't too much running. Sometimes you're just looking for a little bounce off of a support or resistance level, and so consequently there just isn't too much running. So after years of experimenting, I've just decided that trend following for me. I'm not saying that reversal trading is bad, because the whole concept of reversal trading is that price always wants to stop or stall or pull back a little bit from a support or resistance level of some kind, whether it's a trend line or just a support or resistance level, or pivots or Fibonacci's or what have you. But you have to really focus on that. And trend following is a lot less stressful for me. So I like that a lot better. Strategy fits that philosophy. So let me start by taking a look at the MACD indicator. For those of you who've never seen one, this is kind of what a MACD looks like. I mean, they all look a little different, but it consists usually of two lines and a zero line. Some of them have this histogram, others don't. But basically, these are two moving averages. In the case of the default numbers, One is a 12 period moving average, the other is a 26. And so this consists of a signal line, which is the faster, and the MACD line, or the main line, which is the slower moving average. And the histogram in this case just shows you where the lines cross over. Okay. So most MACD histograms are in colors, so you can see at a glance which way the trend is going. And in case you're like me, you like to know what MACD stands for. It's moving average convergence divergence. So if you watch my trading divergences video a few weeks ago, you know that trading divergence is pretty powerful. So I'll link that video below if you haven't seen it, but the MACD is a great indicator to use for trading divergences. I usually use the RSI, but it doesn't matter. Just about any oscillator works really well. And you can see that that typically the main line will follow what price is doing. Okay. And divergences happen, like right here's a divergence. We've got the making a higher low, but price is making a lower low, and that typically indicates that maybe price is going to go in the other direction, which obviously it did right here. You can, we're not going to talk about divergences. You can look at them in that other video. So I want to talk about another little trick that you may have seen me do in the past, but it's an integral part of the strategy. But let me talk about this one other problem, and that is this is a trading view chart. MT4 is a whole other animal. I use both MT4 and TradingView. I like them both. I even, write indicators and stuff myself for MT4 sometimes. But this is the default MACD for MT4 right here, and it's ugly and hard to read. It doesn't have two lines. The second line is represented by this histogram right here. Now, I guess a crossover between this and that line is a little more obvious, or is obvious here, but this is just hard to read. So on MT4, I use this TIPU, T-I-P-U. That sounds Kiwi, doesn't it? The TIPU MACD, I like it. I'll include a link below. It's a freebie at MQL5 code base, where you can get a lot of great MT4 indicators. But I'll link it below so you can check it out later on. And it's got a lot of cool alerts and dashboard and stuff that I don't use and shut off, but you may like them. So, and this one works just like the default on TradingView. So I'm just going to look at TradingView for today. Okay, on to the strategy. Little trick. Let me switch over to TradingView chart. Here we go. Okay, so this is a daily chart of the pound yen on the TradingView platform. And I'm sure a lot of you have made trend lines on price action before, like these two lines. Okay. And since price rarely moves in a straight line, we use these trend lines to give us an idea, to make it more plain that price is making higher lows, lower highs, or what have you. Okay. So here's the little trick. Trend lines are not just for price action. You can use them on indicators as well. Now, I know you guys have probably seen me do it. You may already know. You may already know about it. That's great. But but I like to see use it for the strategy right here that we're going to look at. And this is the default setting for the MACD on TradingView. And one thing that will make this strategy easier to do if we remove the histogram, and you just do that by clicking on the gear there and just no histogram. And now we're just looking at the lines. So that just makes life a lot easier. Okay. So you can see there's a couple of highs here that would make a nice histogram. I mean, make a nice trend line. So boom, boom. There you go. You got a trend line. Okay. And it's as simple as that. Just look for higher highs or lower lows and connect them, and it gives you a trend line. So let's take a look at another pair here, and I'll show you how we'll use this trend line. See Euro USD daily chart. I connected these two lows right here, and then I looked for price to break through that trend line. When the signal line broke through on that candle, on the close of that candle, I took a short because it's breaking through to the downside. As you know, I like to use the ATR for my targeting and my stop loss. So here the ATR is around 70, 78, I believe. So my first target is 78 pips, and my stop loss is 117. Came really close. It may have hit the first target right here, which would have closed this trade off because the second half of this trade would have been at break even then. It looks like it cleared the stop loss here. Definitely would have hit the target here and maybe made a little bit more. So I did cherry pick these examples. You know, a lot of the trainers are cherry pick examples and then try to make it look like there are thousands upon thousands of these. Well, there are a lot of them, and not all of them work. I picked ones that worked, so that straight how they work and how you handle this trade. Okay, so I picked out a few, and we're going to go and look at try to find some others later on. Here's a daily chart. I connected these two lines, went short on a break right here of the trend line. That would have worked out really nicely because price barely pushed up above it here. The ATR is roughly 76, maybe 77. So our target would again be 115, 120, which is way up here. Price never got anywhere near there. And our target then would be, first target would be 78 or so, right? And then look, it pushed down 675 pips to right here. And even, if you caught this run and closed on it, it's 983. I personally probably would have missed this 300 pips down here because of the way I trade. But I would follow stops on the second half. I'd take profit on the first and set the second half to break even. And then at that point, I would just follow stops until I got a push back up. And maybe I'd use the parabolic SAR to know when to shut the trade down for profit, in which case it probably would have closed down on this bar somewhere. So I might have made 400 or 500 pips on this second half. So, and the last one I looked at specifically is on the odd USD daily chart. I connected these 2 points. Could have taken this short on this break. The ATR is 61 at that. So my first target would have been 61. And obviously we got that right on the couple of days later. And then we got this nice 350 pip push down. So I'm sure I would have been out my second half somewhere along in here for 100 or so. I believe this strategy works better on longer term charts, and because of this, because of the size of your stop losses, you're going to have to trade smaller size to manage risk. I'm sure that this would work well on shorter time frames, but I'm kind of partial to trading the daily chart because you only trade about 15 minutes a day. And as much as I love looking at charts, I've gotten tired of looking at them, 10 hours a day. So I kind of have a tendency to want to watch daily charts. Here is a situation that's setting up odd USD. This is a trend line that hasn't been broken yet. So I'm going to keep an eye on this, and I will, share in a video if I see this thing approaching, because that's going to be a really nice. Okay, again, I'm going to say something that few other trainers do. These are cherry-picked examples. Okay, find examples so you'd see what the trade was supposed to look like. This doesn't work 100% of the time. Nothing works 100% of the time. Okay. This may only work 50 or 60%, but if you manage your trades properly, you can make a lot of money with a strategy that works 60% of the time. Okay, I'm going to randomly open some charts and just find these and kind of give you some guidance as to how to find these. I'm going to start here with this pound. I found this one this morning when I was. Here's a nice cross on this pound yen, and that would have been along right here on the close of this candle, and from here it went 400 right up to here. So this is the pound yen, so it probably has a huge, let me find it again. Yeah, 176 ATR. So that would have been, up in here somewhere on your first half, and then the second half somewhere on this pullback, I'm sure. If you let the second half run, sometimes it's going to stop out, break even. That's part of the job. That should offset most of your losses, and it should also reduce your losses a lot because you did take some profit, and you kept the second half from being a loss. What you're looking for is to allow your trade to run, like the maxim says, allow your winner to run. So if you're on a trade here and you made 150, 160, 170 pips on the first half, you've got to give the second half room. Okay. It's a free trade at that point. It's not going to cost you anything at this point, except maybe a little opportunity cost. But if you manage it properly, you can get several hundred pips on your second half once in a while, and it's those big wins that will make you profitable. Okay. Okay, let's look at some other charts here and see what we can see. Let me just look at some Forex charts. I'm just going to pick one. Odd yen. Let's see. Here's a trend line right here. From here to here with the break right here. How did it do? Well, that worked out real well, didn't it? Break on this close. hang on, just having trouble. Yeah, 800, 900 pips right there to there. But even if you didn't take, you're still looking at 400 or so pips right into here somewhere, which is likely where the stop would take place. Let me parabolic SAR on here, if I can find one. Here we go. Strategy, no. There we go. There's a SAR, and let me change the settings to 1, 1, 1. Whoops. One, one. There we go. That gives you a little bit more space to run. So here on this trade right here, if I held for the parabolic SAR, the second half would have made 250 pips on the second half. The first half was 94 or 95. So let's another one. How about Euro odd? Euro odd. Okay, here are a couple of lower lows right here, and I would have drawn this. Actually, I would have drawn this one had I been around. That would have taken us short on this candle with 123 pip ATR. So our target would have been, our initial target would have been 123, and that's short from right here, 123. So our stop loss probably, yeah, our stop loss would have been hit on here. So this would have been a loser. Here is another one to look at. Now that's just kind of fiddling around. I might have taken one of these, but I don't. This isn't looking really good right here. But like I say, it doesn't always work. Let's look at Euro Pound. Might have looked at this one right here. And gotten a short right in here, which may or may not have worked. So that's 80 pips. Let's see, what would our target be? 72. So yeah, we might have made profit on that one. Okay, you guys kind of get an idea of how this works. You can prove out the system by doing exactly what I'm doing right here. Go back through your charts, draw these trend lines on the MACD, and then look at where your trades would take place. This trade would take place. I only trade on the close of the daily candle, because if you watch the video from earlier, you know that closed candle tells a story, even if it lies. But you can take a look and you can see what the ATR is on that day. In this case, it's 74. And then you just measure from here and 74. See if it hits 74 before it hits 117 or 118 or whatever the 1.5 times that is. And obviously it did hit that target well before it hit that stop loss. So you know that your trade is free once it hits the ATR target. Okay. Always back test, forward test this before you try this on real money. Back testing will tell you if the strategy is sound. Forward testing will tell you if the strategy is realistic. In other words, now I'm showing you historically how this works, but I'm looking at the results. I see that there are already results here, so that's a lot easier for me to pick it out. Picking it out during live trading is another story. Here's an example of a potential live trade coming up. Okay, from here to here, we've got a nice trend. So let's look for it to break short below here. Here's another one from here to here. It broke long right here. What would have happened on this break? It was long from right here. So it went up 100 pips. So yeah, that would have hit a target on this long right here. So it's a little hard for them during actual live trading. But of course, it's hard for me to demonstrate it using live trading techniques because these things haven't happened yet. So the thing to do is after you've determined that a strategy is going to work, then start live trading it, on a demo account, and see where it goes after there. So you got to set these lines up and come back and look at them every day and find, just before the market closes. The market closes at 5 p.m. New York time, at least at all my brokers. So I come here I sit down about 4:30 and I look at the trades to see what could potentially break. So, and then I put when I get a close. Actually, to be 100% honest, I usually put these trades on about 15 minutes before the close. And the reason is because the spread gets crazy just before the close and stays crazy for 30 minutes after the close. So I usually put the trades on just before the close, before the spreads go wacky. Okay? Be sure not to risk more than a couple of percent on each trade. Okay? It's just not worth it to blow. You hear me say this every time, and I'm going to say it every time. And if you don't like it, I'm sorry. But your first job is to protect your account. If you don't have a trading account, you don't trade. So if you've spent, a portion of your life savings, and you should never put all your life savings into a trading account, but if you've got a portion of your life savings in a trading account and you blow it out, then you're going to have more of your life trading. Your life savings to rebuild your account. So just don't be stupid. Which is another one of my maxims. You guys are going to get two today. And this is one that Casey's one of my favorite people. You guys probably know Casey. Casey says that trading stupid is not a good trading strategy. So I love that line. I'm going to put a link to our blog on this strategy below. We got a blog that explains this strategy in way more detail. But try using trend lines on other indicators as well. You might discover a cool new strategy. There are more strategies out there that haven't been discovered yet than there are people trading. So do that. Okay, does anybody have any questions? Let me go back through the chat here and see what I see. Benito, thank you very much. I appreciate it. Fred, yeah, Tipu is really nice. I like it, and I I haven't taken the time to learn about the dash, but I don't uh, alerts. MT4 alerts are the most annoying thing in the history of ever. So I don't use them for anything. What I do use is I push the MT4 alerts to my phone and then put a really unobtrusive sound on my phone so that if there is an alert, I get it, but it's not that annoying noise that that MT4 uses on my computer. Oswald, one trend line cannot be connected to highs and lows. See technical analysis manual. Um, Trading price turning points can be 100% profitable. Um, uh, I'm not sure exactly what you mean. If I did connect a trend line to a high and a low, that was a mistake, and I apologize. Um, I did put a trend line up on the pound yen, I think, that may have appeared to have connected to highs and lows, but it actually was not. Let me see if I can get that back up here. This is what you're talking about. It's actually here and here, and I just yeah, and that's the cool thing about trend lines. A lot of times, my intent was to look at this right here, but it respected that line back up here as well. So the truth is, there are 1,000 ways to put a trend line, and if you have 1,000 traders, you'll get 1,000 different ways to place a trend line. But in the final analysis, in my opinion, they're all right. But let's see, trading price turning points can be 100% profitable. Yeah, I guess they can be if you play them right, but depends on where your signals are and how you manage your trade and so on. I would rather think that nothing is 100% correct because that way I don't throw my whole trading account at one trade. So it's just better to think that nothing is 100% profitable. I have never seen a strategy that was 100% profitable. I've seen some that are come dang close to it, but nothing is 100%. Most of those trades were like martingale type trades, and martingale type trades can appear to be 100% profitable until they're not, and then they blow out your account. So just be careful thinking that anything is 100% profitable, because unless you have a crystal ball indicator, and if you do, I know a lot of people that pay a lot of money for that. Let's see. Aryan, Shakib, hi, thanks. Let's see. Special when indicator or EA indicated the high different from the low. Oswald, I'm not quite sure what you're saying there. Like FL11 of the Forex line 7 collection of indicators. I'm not familiar with. Sorry. Vivek, I don't trade binary options. I haven't even looked at binary options since they started. I looked at them early on and determined that that it was tilted too much in favor of the house, as you know. I mean, as you may understand what I'm saying. In other words, a win netted you like 60%, and a loss netted you minus 100%, and that bothered me. I kind of like the idea of binary options, but I think the house was trying to keep too much of the trade, and so I haven't looked at binary options in a very long time. Ozzy, that was kind of my opinion as well at the time. Now, I'm not digging binary, or pointing fingers, because I haven't even looked at them since, for years. So I do know that my nephew got taken on a scam of binary option. And I told him it was a scam when he started, but he just saw the huge profits his account was showing, and then when he decided that he wanted to get some of his profit out, he couldn't even get in contact with the company anymore. But that wasn't about binary options so much as it was about that particular company. But um, I haven't really looked. So what I'm saying is, I would have assumed that if binary options ever become a legitimate thing, that this strategy could be applied to that. Sure. Um, Here's the thing: Forex was considered a scam just like that in the beginning as well. And Forex has come into its own. I mean, Forex retail trading, like I do. So I remember when Forex retail trading first came out, and everybody said, well, it's a scam and it's dangerous and stay away from it and so on. And there's still scams involved in it, but it has come into its own, and I think binary options will at some time too. I mean, you can trade anything. You can trade weather options if you want to. Exactly, where is this hurricane going to hit the coast, within how many meters or how many kilometers, and at what strength, and so on and so forth. I mean, you can gamble on anything these days. How much can be the success rate? I'll be honest with you, success rate of this right here. I do know that a lot of these that I look at, they're getting in. It's getting into this move a little bit late, maybe, because this move is almost half over by the time this signals. But better late than never if there's still profit to be made, right? I mean, I always point out Google. Google was a latecomer to the search engine game, but does anybody talk about anything other than Google anymore? No, of course not. Google, nobody had even heard of Google in 1998, 1999, hardly. We were all looking at Alta Vista and Dogpile, and I don't know how many of you guys were around 20 years ago, but there was no such animal as Google, or if there was, we'd never heard of it. And then all of a sudden, everything was Google. So late is better than not at all. In this case, getting into this trend right here was still profitable as long as you manage it properly. But of course, if you just put the trade out there and you never take profit, then you may as well just throw your money down a tube somewhere. So, Oswald, binary options can be profitable if we know the whole Forex and stock markets trading wise. Yeah, I can see where, I mean, if you had a legitimate broker, I can see where binary options could be successful. You just don't win a very big percentage of your money back on a winner, so. Oh, Bob, that's a really good question. First of all, don't expect to make $1 million. Okay. You can, you'd be pushing it to make a living. It depends on how much you need to make a living. You would be pushing it to make to scrape by on a $10,000 account, maybe. But it depends on how adept you get at trading. But you know what you're doing before you start. Get good training, good mentorship, and so on. So if you want to trade daily charts, it probably would be better to start with a lot bigger account than that. And if you don't have the money, once you demonstrate that you can trade, There are a lot of people that will let you trade their money, and typically you make 30, 50, 70, 60, 70% of your profit when you trade someone else's money, particularly if you're really good. So that's always something good to look at if you want to be a professional trader. I do have a Binance account, Jasmine, and I do trade cryptos sometimes, but not a lot. Ozzy, yeah, the trend be with you. Have a good trade and lots of pips, and let's stop. Oswald, yes, wisdom, definitely. Learn to trade, learn to handle your platform, learn how to win on a demo account. Um, Now, once you win on a demo account, you still, when you switch over to real money, it's still going to be a huge deal because that's where the emotion kicks in. Okay. So start with very small trade sizes when you start trading live. Jasmine, what do you not understand? Ozzy, yes, there's definitely lots of pips to be made, but you're risking a lot as well. I mean, you have to take 150 pip risks, stop losses on a daily chart. So you need to only want to risk a couple of percent of your account. You have to keep your trade size pretty small. Oswald, I agree, a small account, but the problem with a $300 account is you cannot properly manage your risk on that. On a lot of these trades, on daily trades, if you're trading, shorter time frames, definitely. Except I trade with Owanda. I've traded with Owanda for 15 years probably. And the nice thing about Owanda is you can trade smaller than one micro lot, which means uh, that you can properly manage a $10 account on Owanda. I mean, you're only going to make pennies on a trade, but it's real money. And then you can always add to that account as time goes on. Once you're comfortable trading a 10 or 20 or $30 account on Owanda, you can go up to a $100 account, and then a $500 account, and $1,000 account. And pretty soon your 1 or 2% per trade risk is going to be big enough where you can trade on an MT4, regular MT4 account, and trade micro lots. So thanks, Oswald. Yeah, I agree. 1% risk is a good one. Never more than say 3 or 4% though. Okay, anybody else have any question? Hey, you like that? I slipped a little French in there, right? I don't really speak French, just so you know. Okay, as promised, here's the trading maxim number 15. Yeah, I skipped another one. I'm cherry picking my trading maxims right now. I'll catch up with the other ones eventually. So this one shows my sci-fi geek side. I love sci-fi, always have. I read sci-fi, I watch it. And this is a quote from Captain Jean-Luc Picard speaking to the android commander Data on Star Trek: The Next Generation. Commander, it is possible to commit no mistakes and still lose. That is not a weakness, that is life. This so applies to trading. Always remember in your trading, just because you lose a trade doesn't mean you made a mistake. Just means the market chose not to do its normal thing that time. This was a problem I had in the beginning. I'm going to tell you a short story. I hope this is not too boring, but I was trading early in my trading career. This would have been about 2004, 2005. I was trying to trade, what was I trying to trade? Index futures. I was trading like the mini Dow. And, the mini Dow is about a $5 per tick risk. And what I was doing was I was trading on paper, taking a trade, taking a trade, taking a trade, all of them. And I went, okay, I'm ready to go. And I went to my live account and traded and lost. And I went, but. So I went back, I traded and I traded and I traded, always beginner. I mean, always a winner. And then I went back to my live account and traded, took a loss. The problem was I didn't have a big enough account to be trading the mini Dow at the time. And so I was afraid to lose. So I was taking all these trades on paper and on paper and on paper, and then losing when I traded live. And I thought I was doing something wrong. But what I didn't understand was some traders are losers. That's just part of the job. That's just the market. Okay. You're going to take some losers sometimes. If I had just done all those trades live, I would have won, I don't know, 4 or 5 or 6 trades with 2 losses, and I would have been in great shape. But it just happened that each time I took a trade live, it was a loser. It was one of those times when the market decided to do something other than its normal thing. And so I made no mistakes. I committed no mistakes, but I still lost. Okay. So always keep that in mind, you guys. Okay. Okay. So just so you know, this is back here. Is in case you're interested, this is a shot of Sister Grove Park on Lake Levon near Farmersville, Texas. This is one of my son's favorite place to take his family, and this is just a shot of one of the fields over there, and it's just beautiful. It's just a really peaceful, beautiful place. It's not too crowded. So if you're ever in the Dallas area, Farmersville is a beautiful little community. Okay. Any more questions? No more questions? If this has been helpful, please click on the thumbs up below. Okay, that helps us out. Subscribe to our channel and hit the bell so you'll get notification when new videos come out. I try to do this couple of analysis videos a week plus webinar on Wednesday mornings. Okay. You guys have a great day. Catch you next time.